Hello everybody, welcome to Moneyworks. My name is Neil Mardian, Certified Financial Planner and Investment Advisor here in Medicine Hat. Today we're joined by a special guest, Mr. Morgan Harrison, Chartered Accountant and partner here at the EBT firm in Medicine Hat. Thanks for coming. And we're going to talk a little bit about corporations and about people that A, want to be incorporated or want to think about being incorporated at some point in time, and other clients that already are incorporated. So Morgan, give us some insight on kind of what people should be thinking about.
So one of the most important things with respect to incorporating is dealing with remuneration. That's how you get your money out of the company. There's really two options, dividends and wages. There's several facets. Income tax in and of itself is a very small aspect of that decision. The tax between the two is very, very similar. You're really talking about with a wage, you're going to contribute to Canada Pension Plan. There's some pros and cons with respect to that. Obviously, as the employee and the employer, you're contributing twice as much as other employees. But you are creating RSP room, so it depends where RSPs fit in your retirement portfolio and Canada Pension Plan itself. There is one important aspect to remember about Canada Pension Plan is if you've contributed your whole life, you do get up to about 9 years that you cannot contribute, and it doesn't affect what you get at the end of the day. So it is an important thing, not just for people that are becoming incorporated, but people that have been incorporated, and whether or not paying Canada Pension Plan is actually worthwhile for you, and where RSPs fit as well. It's sort of a joint discussion. Gotcha. The next thing is related to income splitting. There's different ways to income split within your family. Dividends can be paid to any shareholder over 18. So if you have your wife doesn't work, obviously paying her dividends makes a lot of sense. She doesn't physically have to work as long as she owns shares. There's also the opportunity to pay kids that are over 18 that do own shares of your corporation. There's some other implications as well with respect to that, but it is important to make sure you're maximizing that. Second thing related to income splitting is wages paid to anybody in your family that can be working for the corporation. For instance, once kids hit a certain age, they can be actually doing work for the company and getting paid a wage and paying probably no tax on that. The last thing is related to tax deductions for your corporation, making sure that expenses incurred to earn business income are being deducted. It's a really important thing to talk to your accountant and get some guidelines as to what types of things you should and should not be deducting. Really the most commonly missed areas relate to vehicle expenses and being obviously looking at where you are driving that vehicle for company purpose, office and home, cell phone, meals and promotional expenses, and travel expenses for business. So those are the major areas to really watch for. Perfect.
Well, I think that gives us a lot more insight into why you would incorporate or what to do when you are incorporated. So I really appreciate you giving some insight on this, Morgan. For Moneyworks, my name is Neil Mardian. Thank you for joining us today. And remember, people don't plan to fail, they sometimes just fail to plan.